Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries behind today's biggest corporations, because sometimes what looks like a simple agreement can hide a whole lot of financial maneuvering. Today we're diving into a recent announcement from SANUWAVE Health Incorporated, a company that seems to be making some significant moves to reshape its financial landscape. Stick around to see what this means for their future. And before we dive in, if you love getting clear, no-nonsense insights from important corporate filings that others miss, make sure you're subscribed. We also have a lively Discord community linked in the description below where we break down these reports together. On this date, SANUWAVE Health Incorporated, or the company as they call themselves, entered into a pretty important financial deal. It is called a credit agreement and it involves them, some related companies, as guarantors, meaning they promise to step in if needed, a bunch of lenders and a big bank, JP Morgan Chase Bank, acting as the main go-between for all parties. This agreement essentially means the company is getting a big chunk of money. They've secured a $23 million loan that they'll need to pay back over time, which is called a term loan. This loan is due to be fully repaid by September of 2029. On top of that, they also got access to another $5 million facility. Think of this like a credit card, but for a business they can borrow money from it, pay it back, and borrow again up to that $5 million limit. This one is set to be fully repaid by September of 2027. The amount they can borrow from this revolving credit line isn't just a fixed amount though. It depends on how much eligible money they have coming in soon, like from customer invoices. So what's all this money for? Well, it is earmarked for things like running the day-to-day business operations, also known as working capital. It is also for other general company needs. Importantly, part of the money they got right at the start was used to pay off their old debts and any other money owed related to something referred to as the NWPSA, which we'll touch on in a bit. They also use some of the funds to cover the costs associated with setting up this new credit deal. Now, let's talk about the cost of this money. The loans will have interest charged on them. They have a couple of options for how that interest rate is calculated. One option involves a benchmark rate called SOFR, which is a common measure for short-term interest rates plus an extra percentage called a margin of 3.50%. The other option is a base rate, which is usually a bit higher, like the prime rate banks offer, plus a margin of 2.50%. So they can choose the option that makes the most sense for them at the time. The interest payments are due either at the end of the borrowing period for the SOFR base loans or every 3 months for the base rate loans. For the big $23 million term loan, they will be paying back small portions of the principal amount regularly, every 3 months. This is what's called amortization, meaning the loan gets smaller over time. Here is a crucial part to understand about these loans. They are secured loans. This means that if the company can't pay back the money, the lenders have a right to take over a lot of the company's assets. This includes pretty much everything they own, both physical things like equipment and valuable things like intellectual property. It's a pretty strong safety net for the lenders. Along with getting the money, the company also has to follow a set of rules called covenants. These rules basically put limits on what the company and its smaller businesses can do. For instance, they generally cannot take on more debt or create new claim rights on their assets without permission. They also have restrictions on merging with other companies or selling off big parts of their business. There are also specific financial targets they have to meet. Every 3 months, they need to make sure their total debt isn't more than 2.5 times their earnings. This is called the maximum total leverage ratio. They also need to show that they are earning enough to comfortably cover their loan payments and other required charges, with a ratio of at least 1.25 to 1. This is their fixed charge coverage ratio. Meeting these numbers shows they are financially healthy enough to handle their obligations. The agreement also lays out what happens if things go wrong. These are called events of default. They include not paying back loans on time, breaking the rules we just talked about, getting into financial trouble with other significant debts, going bankrupt, having large court judgments against them, or if control of the company changes hands. If any of these default events happen, it can lead to serious consequences. The lenders can stop giving them any more money, demand all the money back immediately, and take action to recover what they are owed. It is also worth noting that some of the banks or their related companies that are lending money to SANUWAVE might also be providing other services to the company, like regular banking or financial advice. For these services, they get paid as they normally would in business. Now remember that NWPSA we mentioned earlier. On the very same day they got the new loan, the 25th of September 2025, they used some of that money to completely pay off and end an old agreement called the NWPSA. This agreement was from August of 2020, and it involved getting money from note holders and an agent named NH Expansion. It looks like they've fully settled up all their obligations under that older deal. This next part is just a formality. They are saying that the information we just discussed about the new credit agreement is also considered the information for this particular section, which deals with new financial borrowing obligations. So it's essentially pointing back to the same story. The day after all this financial shuffling happened, the company put out a press release to let everyone know what they had done. This is pretty standard practice for significant financial events. And for those who really want to dig into the details, the full document of this credit agreement is being filed along with this report. It lists all the parties involved and the date it was made. So what is the big picture here for SANUWAVE Health Incorporated? They essentially refinanced their debt. They've taken out a new, larger loan facility with a well-known bank, JP Chase, and used it to pay off an older, likely more restrictive or expensive debt arrangement. This new facility provides them with more flexibility, including a revolving credit line they can tap into as needed for their operations. The extended loan terms until 2029 and 2027 suggest a longer term view for the company's financial stability. However, the fact that the new loan is secured by nearly all of the company S assets is a significant indicator of the company S current financial standing. It means lenders are taking on considerable risk, and the company is putting up substantial collateral to secure these funds. The financial covenants, like the leverage and coverage ratios, will be critical for the company to manage. If they fail to meet these, it could trigger default clauses, leading to serious repercussions. Overall, this move appears to be a strategic effort to bolster their financial foundation and provide the necessary capital for ongoing operations and perhaps future growth. The key will be their ability to manage this new debt effectively, meet the financial covenants, and drive the business forward to generate sufficient returns. It's a fresh start financially, but one that comes with clear responsibilities and potential risks if managed improperly. What do you think about SANUWAVE Health as new credit deal? Does this signal a period of growth or a sign of underlying financial pressure? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up, and don't forget to subscribe for more in-depth corporate analysis. You can also join our Discord community linked in the description for more discussions and real-time insights. Thanks for watching, and I'll see you in the next one.